As a freelancer in Spain, you don't pay one tax, you pay four. IRPF VAT, European VAT if you invoice outside of Spain, and the freelancer fee every month without exception. Nobody sits you down on day one and explains how these four work. Instead, most people learn the hard way after they've already messed up a tax return. I'll explain how they work in less than 10 minutes. By the end, you'll know how much you pay, how you pay, and why. Let's start with IRPF, the personal income tax. You don't pay IRPF on everything you invoice, but on what's left, your income minus your deductible expenses. And you don't pay it all at once a year, you pay it every quarter. 4 times a year, you file Form 130 and advance 20% of your profit to the tax office. The first quarter you pay in April, the second you pay in July, the third in October, and the fourth in January. That 20% is an advance, not a final calculation. Between April and June of the following year, you file your income tax, the annual declaration. That's when the real math happens, what you paid in advances versus what you actually owe, all according to the progressive IRPF brackets, which range from 19% to 45% depending on what you earn. If you overpaid, they refund you, and if you underpaid, you pay the difference. One phrase to remember this, Form 130 isn't your final tax, it's an advance. The income tax return is the real count. Second tax, VAT. When you buy something from a Spanish business, you also pay VAT at similar rates. Every quarter, you do the math. If you collected more VAT than you paid, you owe the difference to the tax office. And if you pay more than you collect, that excess isn't lost. It carries over to the next quarter. And at the end of the year, if you still have a balance in your favor, the tax office refunds it. Pay attention because this is the part most people skip. The VAT you collect isn't yours. It belongs to the tax office. You're just holding on to it for them. If you spend it like it's income, when the quarterly payment comes, you won't have the money to pay it. Treat it as pass-through money, not as profit. Set it aside when it comes in. Now, if you invoice outside of Spain, the rules change depending on who you're selling to. Let me give you an example. You sell to another company within the European Union, and both of you are registered as intra-community VAT operators. Then you don't charge VAT on that invoice. This is what's known as the reverse charge mechanism. There's one condition you can't skip. Always ask your client for their VAT number before issuing the invoice. If one of you isn't registered as such, you have to pay and charge VAT on that invoice as if it were a domestic payment. And watch out, because the responsibility to verify this falls primarily on you as the seller. Here's another example. You sell to an individual within the European Union. In this case, you do collect VAT. Third example, you sell outside the European Union. Here, you don't apply VAT to any invoice. 3 different cases, 3 different rules. Take note of this. If you regularly sell to European companies, it might be worth registering as an intra-community operator to avoid having to charge and pay VAT on every transaction. Fourth and final tax, the self-employed fee. It's a monthly payment to Social Security, and it's automatically taken from your account every month. If you've just registered, you pay the flat rate, which is 88 euros a month for the first 12 months, though in very specific cases, it can be extended for another year. After this period, your fee is no longer flat and is calculated based on your actual net earnings. In other words, the more you earn, the higher the fee you pay. It's not a tax you can ignore until the bill arrives. You must have money in your account to pay it when it's automatically withdrawn. With all this information, let's review. Income tax, you pay 20% in advance every quarter and adjust once a year. VAT, you charge it, you pay it, and the difference goes to the tax office or is refunded. European VAT, it depends on whether your client is a registered company, an individual, or outside the EU. And Social Security, a flat rate for the first 12 months, and then it depends on what you earn. 4 taxes, 4 different rhythms, and the day-to-day boils down to 3 things. Charging the correct VAT, applying the correct withholding on invoices to Spanish companies you bill if applicable, and saving enough money in the bank for each month's fee. The rest you can automate or delegate. The important thing is that you know what's happening with your money. If you liked it, give it a like or subscribe. Every week I explain how being self-employed in Spain works. And don't forget to mention in the comments which of all the taxes we've seen still leaves you with questions. If you write to me, I'll probably make a video answering you. Alright, see you again in the next one and take care until then.